So good morning, everybody. Again, my name is Frayne Olson. I'm the crop economist and marketing specialist here at NDSU Extension. I'm going to be providing an outlook, kind of a review of 25, but more importantly, an outlook for 2026 sunflower market. And as with a lot of crops that we grow here in North Dakota, especially some of what I call the smaller market crops or the specialty crops, it gets really, really hard to find good information about what's happening. But I'll do my best to be able to share what I've been able to find out and give you some things to think about as we move forward. So first, let's do a quick kind of review of history. For those that have heard me talk before, I usually try and put things in historical perspectives to give us an idea of where we're at right now relative to where we've come from. So let's talk about planted area or planted acres. So when we think about planted acres, we actually got a very large USDA report, or actually a series of reports out yesterday. So this does include the information that USDA released yesterday. And one of those big reports was the annual production report. So we do have now updated information on planted area, harvested area, yields, as well as total production. Now, the reason that this January report is so important is because it's not only based upon historically what USDA does is surveys of farmers and ask them about planted area and yields, etc. They do that throughout the year. But in the January report, what they're doing is they're also cross-checking the survey results with actual information and data from both FSA, the Farm Service Agency, which administers the farm program, as well as RMA, which is the risk management agency that supervises the crop insurance system. And so what they're doing is they're comparing what farmers are reported through the farm program enrollment, through the crop insurance enrollment with the survey information to try and make sure that we have as accurate of information as possible. Now, in the case of smaller market crops like sunflowers, they don't do a lot of survey work and follow some of these minor oil seeds, at least not like they do for the corn and soybeans and wheat area. But fortunately, based on the timing this year, we do have the official information now. So you can see in the blue, that is the area planted or the acres planted to the oil type sunflower, and then the red would be that the planted to the non-oil type. So they do try and separate oil versus non-oil. Again, just as a reminder, not a surprise to anybody, 2024, we had a very large reduction in planted area. We saw a rebound in planted area in 2025, and actually even the 2025 acreage numbers were a little bit lower than what we've seen historically. So if you look back at about the last 10 years and look at the average plantings for oil type sunflowers, we're still a little bit on the tight end, and I'll explain why that's important in just a few minutes. Now, for non-oil type, at least that's the classification as non-oil, basically confections, pretty stable. Again, a very contract-based kind of production system. The buyers of the large seeded or the confection sunflowers are pretty good at making sure that they maintain their acreage base and work with those farmers that they worked with historically. Now, when we shift to production, and again, maybe some people can help me out with this, but when we look at total production, so this would be, I got a typo on the left-hand side. That should be in million hundredweight. Or no, it should be a million pounds. Million hundredweight, million hundredweight. So on the left-hand side, it shouldn't be acres. That was my error. When we look at total hundredweight produced, we do see that, again, a rebound, a recovery in the non-oil type, but a pretty substantial production in the non-oil type. So we got this nice blend. So when we think about sunflowers, it's kind of like talking about wheat. When we talk about wheat, we got many different classes or subclasses. Same thing with sunflowers. We have to think about the end use, because even though the production practices are very, very similar, the end use and the pricing systems are a little bit different depending upon what type of sunflower we're growing. So let's look again at a kind of a higher level. I zoom back out again and looking just at sunflowers in general. Now, I want to explain this very quickly. The green line is total production. So how many pounds did we produce? Again, this is in million pounds. The red line is total consumption or usage. So how we're tracking out the usage and consumption piece of this. Now, the blue bars on the bottom is the stocks to use ratio, or basically it's a measure of our inventory as a percent. So of of all the production, all the consumption, how much do we have left over moving from year one into year two? So how much of last year's production are we going to carry forward into this new year's new crop year? And typically what happens is as that ratio, so we're taking the total volume divided by total use. So percentage-wise, how much of a buffer do we have? And you can see that ending stocks as a percent of use, the blue bars on the bottom, does vary quite a bit from year to year, and it is heavily influenced, obviously, by not only the production side, but also the consumption side. And I'm going to talk about a bit more about that in detail in a second. So based on this, notice that we had a pretty large carryover that occurred in 2023. So that would be this blue bar kind of 2 years ago. Big increase in carryover stocks. As a result, prices dropped. We saw a big drop in planted area, planted acres. As a result, we dropped our production faster than we dropped the consumption, which meant we ate up some of those inventory levels. Now this year, with a return to more normal acreage, and our yields were actually pretty good for both confection as well as for oilseed, we're starting to rebuild those inventories, but I'm really not terribly concerned about it yet. So when we think about the size of this red bar relative to history, so the red bar is the current USDA forecast for ending stocks. Again, this is a forecast, so we know what the production side is, but we don't always know what the consumption side is. So when we think about this year's inventory levels compared to history, kind of eyeballing it, we're looking at kind of a normal carryover stock. So it's not that we have huge reserves built up, but we're not necessarily coming in on fumes either. So the market is looking at it right now saying, well, we're kind of balanced. We're kind of where we'd like to see as far as a normal carryover stocks. Okay, so that has some implications not only for pricing in 2025, the rest of this marketing year, but in particular as we move into 26 and we think about planted area in 2026. Okay, so let's move on. How do we use up sunflower? Now again, USDA doesn't get super precise on this. I wish they would do a little bit more work and put a little more effort. It'd make my job a lot easier, but we got to work with the data we have that we have to work with. So let's look at this, really kind of dissect what are the two big uses. So the crushing side is the blue bar. Now, USDA does a pretty good job of tracking domestic crush, so crushing systems. So every month USDA does a major survey of all the crushers in the United States, and obviously most of those are soybean crushers. We do have several plants in the US that are called soft seed. So the soft seed crushing plants would be for canola, sunflower, flax, cottonseed, etc. So when they do this survey, primarily for the soybean industry, we also get information about other minor oil seeds like sunflower. And so I feel pretty comfortable with that crushing number, their estimate for the blue line. What gets to be a little fuzzy and a little harder to dissect is the red line, which is all other uses. So basically it's all non-oil use and seed. So again, some of the acres that are planted are going to be held back and production held back for seed. Now, because of hybrid, that's just like corn, some pretty specialized areas. So the largest portion of that would be other non-oil use. So what are the other non-oil uses for sunflowers? Pretty simple. Some of it's human food, primarily in the confection market, but we also have the bird food market. And again, what ends up happening, if you look at what's going on and think about the production, what years did we have really big production? Like back here in 2022, and then into 2023, and then a real drop off in production in 2024. What happens is this non-oil use category tends to be our shock absorber. So let me rephrase that a little bit. What really becomes the base, kind of our core uses for sunflower, is the crushing demand. And again, looking back historically, that's always been kind of that base area. Now, what happens if we have a really big year where we have big acreage, big yields, big total production? How do we get rid of, or where does the extra sunflower that's produced, where does that go? Well, typically when we think about corn, soybeans, and wheat, we look to the export market. But in sunflower, we really don't have a big, robust export market. So notice the black line is the amount of exports. And again, I feel pretty confident that USDA is tracking the export number pretty closely because anything that exits the US or enters the US has to be inspected, especially for agricultural products. And so we have a really good tracking system for exports and imports of products. So again, the black line I feel really comfortable about. The blue line for crushing, I think USDA is doing a really good job of tracking that. The hard part, though, is all this other usage or other consumption. I really wish there was a way we could pull some of that apart to get a bit more detail, but unfortunately we can't do that. So think about this. Let me go back to this bird seed demand, and I'm going to joke here a little bit. This is not feeding wild birds that we talked about earlier, but this is actually feeding birds domestically, where people will buy a package of bird food and feed the birds in their backyards. That really does tend to be the shock absorber. So whatever does not go into the crushing sector typically has to go into this bird food market. Now, the bird food market, if you think about just generic wild bird food mixes, a lot of times if I'm blending that, I'm going to blend a whole bunch of things into that. It could be sunflowers, it could be some cracked corn, it could be some millet, it could be some safflower. There's a lot of things that can be put into the generic bird seed, the wild bird seed that you see in the stores. So again, if sunflower prices are relatively low, you'll likely see more sunflower, a larger portion of the sunflower go into that mix. Versus if we have really high sunflower prices, well, we'll probably see lower amounts of sunflower going into that mix. So again, thinking about if we have a big year or a poor year from a production standpoint, where does the extra demand go? Where do we get rid of all this inventory? On the flip side, if we have a really tight supply, who's the first one to cut back on consumption or be able to switch to something else to be able to utilize this? So this becomes important for pricing. So again, when we think about the pricing of sunflower seeds, the two biggest pieces were going to be what is the crushing demand and what does other oil seeds? What's the price of competing oil seeds? Because sunflower has to compete with canola and peanut oil and soybean oil and palm oil and a bunch of others oils, not only domestically, but also internationally. Okay, now the second part then is the production part and saying how big is this crop? How much do we have to push into these alternative supply chains? So looking at 2025 old crop, it looks as though we have comfortable inventory. So we are going to have to rely on the bird food market to be able to pick up some of our supply. But again, because prices have come down, now sunflower and crushing and the crush margins and sunflower oil is more competitive, which is a good thing. So if you look at the dotted lines on the far right-hand side, that's the current USDA forecast for usage. Now, you got to dig really deep into the kind of the inner workings of USDA to find these numbers, but I was able to track them down. So they do update these numbers once a month, even though they don't change very rapidly. So now let's talk about pricing and the pricing system. And again, as most of you have heard me talk before, one of the things that I use as a proxy, is kind of an indicator of what will happen in the sunflower market, is I look to the canola market. Because again, these are competing oil seeds. As I said earlier, that oil seed market becomes kind of our base. That's our anchor point. That's our main consumption for in particular, the oil seed sunflower. So what I'm saying is that the oil seed market kind of puts that base price in, and I look to canola or soybean oil, I'll show you that in just a minute, as that base pricing piece. And then we start looking at, well, what kind of either a premium or a discount does sunflower have compared to canola? So this graph tries to help tell that story. So let me explain it. The red line that runs through the middle, that is the canola futures market. So again, and I've converted this to US dollars per hundredweight. So this would be the futures market price in the Winnipeg Exchange for canola. Okay, now the blue line that follows that futures market very, very closely, obviously, is the spot canola price. Okay, and then the black line is the spot price, or basically delivered price on that particular day for oil sunflower. Now, I'm trying really hard to try and show this comparison. So I actually was able to track down, in the past I've used price quotes coming out of, for example, Cargill or ADM as a processor to try and use that as a reference point. This year I did a little more digging. I was able to find Southwest Grain, the CHS facilities in Southwest Grain, which would be out of Dickinson area, just outside of Dickinson. They actually post prices for both canola as well as sunflower. So I'm going to use kind of a Western North Dakota pricing system here. So the spot market price, the blue line and the black line, are actual prices paid to farmers. This is delivered to an elevator. The elevator then decides where are we going to try and resell that. Is it going to be to a crushing plant? Is it going to be to a bird food supplier? Now, let's go back in time. I just want to replay this and start thinking about market dynamics. Remember I said that depending upon the supply of canola versus the supply of sunflower, we start to see, well, will sunflower be at a premium to canola or a discount to canola from a pricing standpoint? And for those of you guys that have grown sunflower for a lot of years, there are times when we have big supplies of sunflowers and it's actually priced below the canola spot market price. But this year, not only last year in 2025, but also moving now into 2026, sunflower has been at a premium to canola. And I want to go back. So thinking about what is that premium? And you notice here we have in about the first part of October, we start to see this big jump from old crop sunflower to new crop sunflower. And what happened? Well, obviously we went from very, very tight supplies last year. And once we began harvest, we knew that there was going to be more sunflower coming online. And so once the market shifted from buying old crop out of the bin to where they could start buying some new crop out of the field, we saw this big price shift because our supplies suddenly increased. So sunflower is still right now being priced at a premium over canola, give or take about a dollar and a half per 100. And I do expect, based on what I'm seeing today, I do expect that premium to be maintained. I do think we're going to continue to see for 2025 sunflower, the stuff that's in the bin right now, or the stuff that just got harvested, I do think we will continue to have a premium of sunflower over canola. But again, how much of a premium can sunflower hold? And we went from more than a $3 premium down to $1 or $1.50. And part of that again is because not only did we have a pretty good supply of canola, but we also had really increased our supply and availability of the oil type sunflower. Okay, so my opinion moving forward, I think sunflower will maintain that premium at least throughout the rest of this marketing year. Now the question everybody's asking me is, well, what about that base price for oil seeds, especially for some of the minor oil seeds? So I just want to show you what happens, and this is just a really small snapshot of what goes on in the vegetable oil market. Now, each of the vegetable oils, where you're talking palm oil or soybean oil or sunflower oil, canola oil, peanut oil, cottonseed oil, flaxseed oil, these are all substitutes for each other to some degree. Now, you have some buyers that prefer certain types of oil for particular end uses. And again, a lot of the canola, a lot of the sunflowers are used for frying, high temperature frying for potato chips and for French fries, etc. But these oil seeds are all very competitive. They can substitute for each other. And so if sunflower oil gets to be too priced high above canola oil at some point, there's only so much of a premium it can hold. Same thing with canola. There are times when the canola oil is priced above soybean oil and vice versa. So very quick snapshot. I just want to show the red line that runs through this is the futures market for soybean oil. So this is in the U.S. It's traded in the U.S. This is soybean oil futures. And then I, just as a real quick simple example, I showed the futures price for canola in Winnipeg. Now, I've not done the conversion factor between Canadian dollars per metric ton versus US dollars per hundredweight. I didn't do those conversions. I just want to show the patterns and look at how those patterns tend to follow each other. Now, they're not perfect, things that are going on in the canola market that aren't impacting soybeans, and there's things in the soybean market that aren't impacting canola prices, but they do tend to move up and down together. So we need to think about sunflower prices in the context of what's happening within this larger oilseed market. And I also want to remind everybody that yes, we can sell sunflower into the bird food market. I understand that. But please understand, the bird food market is only going to pay enough money to be able to get those sunflowers away from the crushers and into their hands. So they're trying to figure out what kind of, again, how competitive is this oilseed market? And they're going to price their bids relative to the oilseed market. So what I'm trying to argue here, get you to think about, is it's this oilseed market that's kind of underlying all of this and really is the driving force behind sunflower prices. Now, I'm going to talk just 1 or 2 minutes about canola, just because sunflower and canola are such close substitutes. They're not perfect. There are differences, but they're very, very close to each other. So my translation is what happens in canola tends to influence sunflower very quickly. So there's a really close price linkage between these two. I'm not going to get into a canola outlook, but I do want to talk about a couple things that are happening in canola. These are charts. All of the charts I just showed you are as of yesterday. So the futures market charts I pulled last night at about 9 o'clock. The cash prices that I show was as of the close of business yesterday. So these, I'm trying to stay as current as possible. So you notice that even though in corn and soybeans and wheat, we had a couple really big down days, especially yesterday and into this morning, the canola futures didn't respond in the same way, again, because it's in oilseed and it follows the soybean oil market, not necessarily the soybean market. Just a couple things, what's happening with the supply of canola in Canada. This last year, Canadians cut their canola acres, the acres planted, but their yields increased. So they had a very good production year. So when we look at total tons produced, the total volume produced, the Canadians had a very good canola crop. And so as a result, we're going to have good supplies of canola oil in the marketplace. And again, sunflower needs to compete with the canola oil. On the Canadian side, how much is exported versus crushed? The blue line is how much is crushed into canola. I mean, of the Canadian canola, it's crushed into oil and meal. The red line is the exports number. I'm going to talk a little bit about the exports number. There's been a trade dispute between China and Canada. Their Prime Minister Marconi is currently in China right now, having a trade talks with China. They're trying to open up the door for more Canadian canola to go into the Chinese market because China is the #1 buyer of whole canola. China is also the #1 buyer of Canadian canola meal, although the United States is the largest buyer of Canadian canola oil. Okay, so very, very complicated, but right now, one of the reasons that some of the canola prices are a bit soft is because Canada's had a very difficult time getting some of their whole canola exports as well as the meal exports into China. If that tension starts to relax a little bit, we should get a little bit of a lift, not a large lift, but a little bit of a lift in canola that would then also try and impact some of the sunflower market. So they're going to have plenty inventories of canola in Canada. They rebuilt their stocks from last year to this year. Again, the red bar is the current StatCan forecast. So again, coming back into more of a balanced supply-demand condition, we're looking at kind of normal inventory levels. I'm going to skip over that, and I am like 3 minutes ahead of time. So I actually have a time for maybe a question or two, and then I'll hand things back over to Anna.